Tesla Q3 earnings were a disaster. When you look at the Tesla stock graph right here, it is down 6%. So what caused this? What happened here? It's actually down 6.25%. Well, you first open the report and you see operating cash flow less capex, free cash flow of 3.3 billion in Q3, and doesn't look bad. And the stock jumped at first when the earnings report was released, and then it went straight down. And the reason why I would think is when you come around here and you look at the automotive gross margin, you will see that it is exactly the same as that of Q2. And so you have to start thinking about this. And why did this happen? If we don't have margins, then Shanghai was no longer shut down compared to how it was shut down in the previous quarter. What is up is what most Tesla stock investors are thinking. However, there are a few important explanations that we have to consider. And as you know, as an all-in Tesla stock investor, all I care about are two things. Number one, innovation, because if we innovate, we get margins. And if we have huge margins, then we will have a huge multiple on the company and the stock will be high. And everything else comes basically from those two things. But really, if we have innovation, we will have margin, so it's really only one thing. But let me show you this first. Dave Lee tweeted that also negative foreign exchange impact of 250 million is quite significant, about a minus 1.4% hit to gross margins. So that would be 29.3%. And when we compare that number to Q2, of course, that would be significantly higher. And also, it's important to note that this number, as it is right now, on the earnings call, it was stated that if we exclude Berlin and Austin, the gigafactories, we would be at basically almost 30% already. Now that I like to hear. So those are the only two things that I really care about as an all-in Tesla stock investor: innovation and margins. And there's one more explanation why the margins are not where we would like them to be for this specific quarter. And that is when you work in manufacturing, and my dad is in manufacturing, and I spent, when growing up, 10 years with him every single summer, every single weekend, all the time after school. I would go to his factory and I would listen to every single call that he makes, and I observed everything. One thing that I clearly observed was when you manufacture something, you buy raw materials way in advance. And if you are making a product today, for example, a car, you're using raw materials to make that car that you got maybe 3 months ago, 6 months ago, 9 months ago, maybe even a year ago. It depends on each company. But basically what was said on the earnings call, which I really liked, and until then I was like, what is going on? This might be a little bit bad. But they are basically using the raw materials that they purchased at peak prices, and those cars are selling now. So even you would think, wait a minute, they're selling cars at higher prices. How come their margin is not improving? Well, that's why. Their costs to make the cars, those cars, also increase, and that's why we see that margin staying here. But this is not a concern for me, at least after hearing that explanation. Definitely not a concern long term, and also because of a foreign exchange hit as well. And then, of course, mind you, 4680 batteries are being put into production. In fact, this quarter, we had 3 times more of 4860 production compared to the quarter before, so that's ramping up. Interestingly, they are not using 4680s for the semi, at least not yet. And already they can achieve the 500-mile range with full load in the trailer. Quite impressive. So we still haven't implemented some of the biggest cost-saving measures, and the profitability is already where we like it to be, pretty much. We are clearly going into that direction. And then another thing to pay attention to is right here, which would be operating margin. So just take a look right here, 17.2% in this quarter, while in Q2 was 14.6%. Now before we did have 19.2%, but still clearly the trend is positive. If you compare Q3 with last Q3 a year ago, we are doing quite a bit better. In other words, let me actually show what that actually means. So see, this right here is revenue for Tesla, clearly growing exponentially. And right here is something that is not growing exponentially. In fact, it is barely growing. This is, when you look at this, operating expenses are just not growing nowhere as fast as revenue, which is basically the whole thesis of Rob Maurer's bull case, is the operating leverage. Tesla, according to Rob, will grow its revenue much more faster than the expenses would, basically, to put it very basically. And of course, taking into consideration all the government incentives and knowing that Tesla is targeting very low cost per kilowatt hour of battery, this is looking good. And I would just like to reiterate, Tesla is not competing with other EVs. It's competing with internal combustion engine manufacturers still, for now. Later, that will change eventually. But for now, basically any company that makes an EV that is not a complete steaming pile of poop, they will sell every single one of them. Maybe they will not have a backlog like Tesla does, and clearly we do see a reducing backlog in vehicles based on the earnings call of today. Elon did admit that the backlog for orders in China are lower because China is going through quite a recession. And like I mentioned before, I don't see that as a problem at all because Tesla can cut prices if they need to. They can also export vehicles to other markets. There is no, you look at North America, you still have to wait for such a long time to get your car. And Elon reiterated that as far as they can see into the future, which I would assume is multiple years, they believe they will sell every single car that they will make. And the way I would also think about it, even if demand slows down for, let's say, Model 3 and Model Y, which eventually it will, unless Tesla solves full self-driving, then any vehicle at almost whatever prices Tesla will sell, they will sell every single one of those because full self-driving is just going to be so valuable. But even if there is slowing demand, then Tesla will just simply make a lower priced vehicle, which on this earnings call, Elon did mention that they are working on the next generation platform, which will be half of the cost than compared to Model 3 and Model Y. So I don't see any demand problem at all, keeping that in mind. And of course, we had Elon saying that for the first time, he sees a way for Tesla to be roughly twice the value of Saudi Aramco. This is the first time I've seen that potential. And somewhere in there, I listened to the whole earnings call. Somewhere in there, he also used the word clear or clearly. I will make another video about this specifically. And also, this is without any robots or anything like that. So that's just with everything that Tesla has going on right now. Now, the word clear or clearly that he used, it might have been to do with just being worth more than Saudi Aramco, which that would be a 3x. And if it was double Saudi Aramco, that would be a 4 trillion. So that would be roughly a 6x from where we are today. And those who are still concerned about demand, Tesla's next generation car design team is primarily focused on vehicle development of this next generation vehicle. I can't see how there would be any demand issue for many years to come that may release this one. The new compact would outsell all other models combined. So if we are going to sell 2 million cars a year next year without the compact, that would be at least 4 million. And of course, we're going to go further, but that's the minimum amount that would be implied at the very, like that would be so bearish to only imply that you're only going to sell, let's say, 4 million of those compacts. And of course, the buyback, while it wasn't officially announced, I would say it's basically coming. Is it going to be in 2023? It's looking quite likely. So the good news is, at least for me, the buyback is not happening this moment, which is when if you were on a call and you were looking at the Tesla stock price in the moment, it appeared to go down. Then this was actually announced because it's not now, it's later, which I am fully on board with. I would much rather prefer a little bit later than right now so that Tesla can build up its cash reserves even further. And I did like to hear one more time that Tesla is spending money as fast as they can on anything that is useful. And the two things that I only care about Tesla, number one is innovation, number two is margin. And I'm going to be making another video in terms of what is going on in terms of innovation that we learned from today's earnings call. My name is Matt Posius. These are the 48 reasons why I only own Tesla stock, and I will see you in the next video. Thank you for watching.